Good morning, good afternoon, everyone, and welcome back to the breakfast show. We are in for one heck of a ending of a crazy week. Thursday was one of those crazy volatile days. We started the day, we ended the stream, everything was green, deep green, even. I left the house, didn't even look at anything. Came back couple of hours later, everything's red. Everything's red. I was like, what the heck was going on here? So I went to my therapist, sold my couch, became a chair investor, and yet here we are. Anyways, good morning, good afternoon, good evening, everyone. You will be asking a lot of questions today, I know. Luckily for us, we are starting the stream where things look a little bit greener than they did 2 hours ago. It has something to do with this because right now, as you can see, it's like every day is it's another flip here. Every day is another flip. So right now we're back at 70.9% probability of a rate cut in December. Shall I remind you where we were yesterday? Yesterday during the stream, start of the stream, we're at 27%. Midstream went back up in the 30s. A day ago, 39.1%. We're now at 70.9%. Why is that? Well, the New York Fed said that there is still a chance or there is maybe enough indication of a cut for December. So I guess the market liked that. And so we will be going from this yesterday. I mean, this is crazy. The fact that all of this was green yesterday morning, deep green yesterday morning, and you have names here down 5.8%, 4%, 6%, 7%, 8% is insane. I mean, the $2 trillion of market value that disappeared in a matter of hours is crazy. Now, right now, pre-market, we have this. And I'm telling you, I saw this an hour ago. Everything was still red. I was preparing a triple therapy session for today. But right now, this is what we're getting pre-market. You can see that our list right here, a lot of green, still some red. And yes, I am now paying for TradingView. So we have specific watch lists, ladies and gentlemen. Look at this. we needed a we needed the stock market to crash for me to upgrade here. It's just because it's Black Friday promotion, so I'm taking advantage of that. So I have chips, I have fintech. We will probably be adding some more in the future. Now, I said something in my Nvidia earnings review video at the end of it. And this was basically it. This was basically it. I mean, isn't that quite crazy? So, all in all, that's about it. No, I'm not saying we're out of the woods just yet, but it is very nice to see some green. This is very woods just so. All in all, that's about it. No, I'm not saying we're out of the woods just yet. I was prepared. I was mentally prepared. Mentally prepared. We were not out of the woods just yet, despite having huge amounts of green after Nvidia reported. It was definitely very nice, very nice to see some green, but unfortunately, we did not really enjoy. We did not really enjoy the green that much or for that long. Although maybe today it might come back, it might also disappear. And thank you, Zibzibai, for becoming a member of the channel. Appreciate that. Appreciate that. Finviz heatmap is better. Yeah, but at least here I can do other things as well. I can do other things as well. You typed in the chat, you just don't trust it, and it's okay. So I guess we have you to blame. I guess we have you to blame for what has happened yesterday. Yesterday, yeah, I mean this is not a pretty picture. But then again, I guess in April it wasn't a pretty picture either. In April we got completely crushed. But yeah, if we go and look at what happened yesterday, 10:30 a.m. Eastern, we were up 130 points. Look at this. I mean, this is insane. One after the other, one after the other. In 80 minutes, $1.8 trillion erased in 80 minutes. We started the day like this. We started the day like this. And in less than a Lord of the Rings movie later, we were deep in the red. Deep in the red. So imagine you start your day, everything's green. You're like, hey, actually, I want to watch a good movie. I want to watch a good movie. You start that movie, and then bam, at the end of the movie, you're screwed. You're screwed. Hopefully not like that couch that I posted yesterday, but yeah, that wasn't fun. That wasn't fun. And there aren't that many explanations for it. There aren't that many explanations for it. They give us here a couple of maybes, right? One here at 11:20. Labor Department says October, November jobs data coming after Fed decision. I don't know if that's the reason for a $1.5 trillion in a sell-off. I didn't really see much yesterday. You have the usual, yes, you have the usual folks like Ray Dalio suddenly popping up out of nowhere again. It's like, oh, we are in a bubble, 80%. But that does not mean that you have to sell. Like, just shut up, man. Like, do you have a book to sell? That's why you pop up every now and then. This doesn't make any sense. But yeah, it can be algos, right? It triggers one after the other. It can be people that get liquidated because, yeah, I assume many are still using margin. And so, puff, you get liquidated, you have stop losses that get triggered. And then, yes, you get this type of situation when one after the other, it goes lower, lower, lower. Everything's panic. Everyone's panicking. Then you have people that are panicking and they say, oh, actually, don't want to lose more. So I'm selling. And it's just a domino effect. It's possible. It's possible. So yesterday was crazy. Yesterday was crazy. What did I get? I got the lowest one, the essential one. It's more than enough. It gives me enough with the watch list. It gives me enough with the indicators. Anyways, I'm not a chart specialist, so I don't really need that much. But yeah, that was that. Then Then there is something else I want to show you guys. Remember this. I showed you this in the Sunday video. So we are now here, the 1 week later. So a week ago, the Nasdaq 100 was falling below its 50-day moving average for the first time in over 100 days. And if you look at what happens with the Nasdaq 1 week later, which again is us right now, 9% of the time, 9% of the time, the market was green. On average, it lost 1.85%. So it's not like we didn't know what was going to happen. The odds were definitely not in our favor. I just didn't think that it would happen after a blowout quarter by Nvidia, especially after all of these AI bubble fears and it's the top, blah, 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 were dismissed by Jensen. I know some people went back to the other video and said, oh, this didn't age well. And oh, Burry was right. But Burry, what was he right about? Because the reason why he bought puts, he isn't right about that, or at least not yet, right? The thesis is not broken. The companies are not going belly up. These companies are still generating billions of dollars in revenue. They're already seeing efficiencies thanks to AI. And so, no, I don't believe that we can say, oh, he was right. Yeah, he was right because maybe the stock market went down. But Nvidia, a $4.6 trillion company that is growing 62% year over year, to me does not indicate that he's correct. At least not now. At least not now. Then we move to the other ones. This is also something that I showed you before. Since the government shutdown ended, by the way, the markets have come down, I think, 5% or so, or something like that. But we've seen here as well that in the short run, S&P or NASDAQ, after the government shutdown ends, it's not the greatest. It's not the greatest. Over the longer term, yes. Over the longer term, things look much, much better. Then if we start looking at more recent data, if we look at some more recent data, we can see the following thing. We see here a spike in put volume. Previous spikes were near bottoms. I'm not saying it's going to happen again now, just showing you the data. Previous spikes have been near the bottom. And here as well, 1 day, 2 day later, it's not great. 1 day, 2 day later, it's not great. Then 3 days, 4 days later, 83% of the time we are green. On average, we are up above 2%. And then a month later, 100% of the time we are green. And on average, we're up 8.28%. Pretty good. Looking at volume for S&P and the Qs here, it's the highest since April. It's the highest since April, and guess what? The high point there was also near a bottom. I'm not trying to give you hopium or whatnot that we are at the bottom right now. Just showing you what has happened previously when these things occurred. Moving on. Couple of cases here. S&P 500, after it gapped up more than 1%, then closed below, well, in our case, Wednesday's close. You can see that a week later and onwards, we are green 86% of the time, which is good. A day, 2 days, 3 days, 4 days later, yes, more than 50% of the time, but it's a bit all over the place. Now, what's crazy is if we go even more specifically, if we're up 1.5% and then closed down more than 1.5%, it only happened October 7, 2008, October 9, 2008, April 8, 2025, which is our liberation day, liquidation day, we call it, and then yesterday. This is the only data that we have here. I'm sure maybe if we can go 70 years in the past, we might get something else. It's possible. But here you can see that a week later, 100% of the time we were green, and on average we're up 4%. So this is all the data we can work with right now. I'm sure as we go through the day, some of these accounts, Subutrade on X, very, very good account. And in this case, the market stats as well on X, very good account to follow. They might pop up more charts, which again are useful, but that doesn't mean that, oh, it happened before, it's going to happen again. As I've shown you back in April, things were 100% of the time we were green a week or a day later. And guess what? We were the lucky ones where we were red. We were red. So now the new stat will show that 2025 April, well, that was the time where we went from 100% of the time green to not 100% of the time green. Every time it's different. Yeah, of course, every time it's different, but it rhymes, right? It rhymes. Buster rhymes. So, did I miss some questions? If I got some questions that I missed, just write them again. Just write them again. I'm just going through my usual monologue right now. I'm going through my usual monologue right now. So yeah, we go back. We see this horrible thing from yesterday, and then we go to today. Right now, today we are seeing some green. We are seeing some green pre-market. Yeah, there is also something going on there with Japan, right? That they're, well, pumping money, pumping money. So I do wonder what happens. What happened with the USD to Japanese yen? If it's probably still very cheap to go there, right? Yeah, it's still very cheap to go there. Guess we should, yeah, I think we should plan a trip to Japan pretty soon. Euro to Japanese, wow, okay. Yeah, euro to Japanese yen. We are now at 100. 1 euro equals 180 Japanese yen. Last time I was there, I was already quite happy, and it was at, I think, around, yeah, 150, 140 or something like that. Ladies and gents, if you wanted to go visit Japan, I think now's the time. Now is the time. Um, you have a strong currency compared to theirs. It's really not that expensive. I don't know. This was like a, I don't know who said it, but oh, Japan is super expensive. It's not. It's not. I was there almost 3 weeks. Okay, was 3 years ago, literally 3 years ago now. Wasn't that expensive. We stayed at hotels. We ate well. We traveled well. It's not expensive. It's a very nice country. Very nice country. Yeah, long flight, but who cares? Like if you have Netflix or if you can sleep in your flight, then it's fine. Then it's fine. Did I buy something yesterday? No, like I said, I didn't buy anything yesterday because I only noticed what was going on with the market later, um, later in the day. But I might probably pick up some things. Might probably pick up some things today. We'll go over a couple of names for sure. We'll go over a couple of names for sure. Um, Tokyo can be expensive. Well, okay, of course everything can be expensive, but in general, I don't see it as that expensive. Again, with our currency right now, it's definitely cheaper. It's definitely cheaper. I can never sleep on plane. Yeah, me neither. I cannot really sleep on plane. Like I can like sleep for 2 seconds, then my head starts to drop, and then I'm wide awake yet again. I'm wide awake yet again. Okay, we have a new thing here. We have a new thing here at the bottom. I'll explain in a bit. QNC, thank you for super chat. Okay, what to buy today? CoreWeave, Nebius, Applied, Cypher. Well, it's tricky, right? It's tricky because we don't know how low can we go. I don't know. I don't know how low can we go. But I mean, I follow and I own Nebius and CoreWeave and Iron as well. Right now, I would probably, if you own them, probably focus on your highest conviction name out of those. Still be prepared for those to come down. I would definitely focus on names like Amazon, names like Meta right now. These are trading at a very, very nice valuation. And of course, they are, in my mind, less risky. Of course, lower beta as well. But these are incredible companies. Even Uber. Where is Uber? We're back at 80. $84 or so. Yeah, $84. I think Uber is also very, very, very attractive right now. It's probably one of those names where I will probably add a little bit today. Probably add a little bit today to those. So yeah, I think right now there are definitely opportunities across the board. I wouldn't mind adding to even my bigger positions right now, right? The big names, even Mercado Libre, which is on the list, but Mercado Libre dropped under 1,900 yesterday. Yes, I know one share will cost you quite a lot. It sucks. It sucks. But times like this, I think you should take advantage of not just buying the high beta names, the high flying names, but also look at, okay, what type of solid companies have also taken quite a big hit today. I'm looking at those right now as well. They don't have to be $1 trillion companies, right? I think a Shift 4 yesterday was also holding up nicely throughout the day. Yesterday was basically flat for a Shift 4. Not too bad. Not too bad. So I would say look at your portfolio, look at your highest conviction names, and you might be surprised that, yes, big companies, solid companies have also taken a hit recently. And you might want to add more to those. I know it's way sexier to add to a Nebius, a CoreWeave, an Iron, a Cypher, a whatever other names that can pop up that have gone up significantly this year. That's also fine. It's also fine. I don't know what your average is. I don't know how big those positions are in your portfolio. But just because those are sexier names does not mean that you should put all your money into them today, because there might be other better, let's say, less riskier, less volatile, great companies that have taken a hit for some stupid reason in the market. It's a possibility. It's definitely a possibility. PayPal, yeah, I mean, PayPal is always on that list. PayPal is always on that list. Although I have enough PayPal. I have enough PayPal with my options, and I do still have some shares. So I wanted to talk a little bit about this new thing here at the bottom. This was shared to me by Vatsal. You know, Vatsal was the guy that came in the other day with 5 gifted subscriptions, another 5, a total of 20, a total of 20. So we're going to talk a little bit about that, and I'll show you that freaking out makes no sense. Okay, I'll show you that freaking out makes no sense. Thank you for the super sticker. Unfortunately, why cannot red down arrow with vertical words here? It's funny that it translates it. It tells me what the emoji is. It tells me what the emoji is. But anyway, thank you for the super sticker. Appreciate that. Okay, so let's take Mercado Libre as an example. So we can see here at the bottom, the drawdown depth, 5 to 10%, 10 to 15, 15 to 20%, and then over 20%, the events, the amount of times, and the frequency. So for Mercado Libre, we can see that a drawdown of 5 to 10% happens every 3.9 months. 10 to 15% happens every 12.9 months. We've had 17 of those events. If we go and look at another big name, basically, let's take Alphabet. Let's take Google here. 5 to 10% drawdowns happen every 5.8 months. Every 5.8 months can have a 5 to 10% drawdown. 10 to 15 every 28.3 months. We have, let's say, another high flying name. So let's talk, Nvidia, right? Nvidia, very popular one. With Nvidia, you can see that here as well, 5 to 10% drawdown. We have 118 events, by the way. And the average frequency is 2.7 months. 10 to 15% drawdowns, 30 events in this case, every 10.7 months, almost every year. And so when you look at these things, and of course you can look at PayPal. PayPal has, well, in this case, some weird frequency here for 1015, 1020. But if you look at maybe a more volatile stock, a Robinhood, I didn't know Robinhood was already closer to $100. That I know it's Robinhood, but it's also an interesting one. It's also an interesting one. But anyways, what I'm trying to tell you here is these pullbacks happen. These pullbacks happen all the time, and in a lot of cases, more often than you realize. More often than you realize. Amazon, for Amazon, is not really a super high performing stock over the last 5 years or so, but the company is insane, right? This is one of the best companies out there. Amazon, 5 to 10% drawdown every 5 months. Every 5 months. 10 to 15%, almost, I mean, let's call it every year. It's every 11.8 months. So every year with Amazon, there is a chance of a 10 to 15% drawdown. Is that a reason not to own Amazon? Probably not. Probably not. And so these things happen. Of course, right now, with what we have seen, let's put what happened here. Here. I was like, what the heck happened? Let's put here the S&P. The S&P has, in this case, and I have seen the super chat. I have seen the super chat. One here from Jens Santiago. Thank you for the super chat. And the most recent one, because this time I don't want to miss it. Here as well. Thank you again. Would you buy Melly today or wait for next week? I don't know what happens next week, but I enjoy Melly at these prices. I enjoy Melly at these prices. It's a tremendous company. It does suck that one share does cost me quite a lot of money because it is in an account where I do not have fractional shares, but it is what it is. It is what it is. Anyways, S&P, every 19.6 months, you have a 5 to 10% drawdown. This is the average frequency. 10 to 15% every 74.3 months. 15 to 20% every 309.6 months. So for the Michael Burrys out there, the bears, the broken clocks, everyone that's now coming out of their cave over the last couple of days, let them, because they usually don't get much sunlight. They usually don't get much sunlight. That's the thing with this drawdown, especially for, in this case, the broader market. The broader market does not experience that many bear markets. If you look at the history of things, we spend way more time in a bull market than we do in a bear one. That's just a fact. It's just not me making up stuff. That's just the data. When we look at specific names, yeah, some names are more volatile than the other. But you're going to see that with a lot of these names, with a lot of these big companies and some smaller ones as well, the frequency, the amount of times that we see drops 5 to 10%, 10 to 15% happens more often than we notice. Happens more often than we notice. At the end of the day, what's the most important? Most important at the end of the day is you're investing in a business. Is that business doing what it should be doing? Margin call. Margin call again. Is the business doing what it should be doing? If the answer is yes, then you shouldn't worry. Then the stock going down has nothing to do with your company. It has probably something to do with the stock market, macro, or maybe another company in that same industry. It's possible. If the business is not doing what it should be doing, then you shouldn't be surprised if the stock pulls back, right? If you own a stock and suddenly the earnings report is horrible, but the stock has gone up quite significantly before it, shouldn't be surprised if the stock comes down significantly after the earnings report. This is, I mean, I don't make the rules, right? This just happens. This just happens. If, well, of course, it happens on the other side as well. I'll definitely pull up this one, a SoFi, right? A SoFi we've seen before. Again, I show you this because it has spent quite a significant time under $10 before it started to go up. And then even when it started to go up, you can see here drawdowns of 20%, 37%, 12%, another 12, 13% or so. These things happen. But with SoFi, what we've seen is okay, the company is doing exactly what it should be doing. It's beating the analyst expectations, it's beating management guidance, triple beats most of the time, and huh, and the stock pulls back. Okay, great. I'll add more. I'll add more. It's normal. You see the company doing well, you see the stock not reacting the way it should. Sometimes it's because a lot of it is priced in, it's priced to perfection. Of course. I mean, I'll admit it. But a lot of the times, no, the market just sucks in the short run. The market just sucks in the short run. It does things irrationally. It happens. And it sucks. We can all admit it. We like to see great companies on sale. But on the other side, we can admit that it sucks seeing the market go down so much for stupid reasons. I admit it. I've seen a comment and ooh, Vatsal here again with the 5 gifted. Thank you very much. Thank you very much. I appreciate that. And yes, this thing right here, what we're talking about, is thanks to him. He sent me that, so at least now we have something to cover during the live stream. But yeah, I appreciate this, and I appreciate the support that you have shown over the last couple of days. Really appreciate that, and actually more than that, because you've been supporter of the channel for a while. Um, but what did I want to say now? I forgot. First the margin call, then Vatsal here with with another 5 gifted. My monologue has been screwed. My monologue has been screwed over. Um, but yeah, I'll go back to saying I admit it sucks. It sucks to see the market like this, like what we've seen over the past past day, of the past week. It sucks. I've seen a comment yesterday. I've seen a comment of someone. Um, this didn't age well, a video, because I knew, right, one day later or a couple of hours later, I knew something was going to happen. Makes zero sense. This didn't age well, and then someone under it says, oh, everything for views. Like, no, not everything for views. I much rather have 0 views and have a market that looks like this every day. I rather have 0 views on my videos and have a market that looks like this every single day. People think we enjoy these therapy sessions. Yes, they're fun in the short term. Maybe they're fun in the short term, but there is a reason why people overreact when things go down, because we are humans. We have emotions. We sometimes overreact. And yes, when we talk here about our own money, we're invested in these companies, right? It's real money. It's money that should help us maybe buy a house, retire earlier, pay for a wedding, whatever. It's real money. So when we see that money go away, I know it's unrealized gains, I know. But when we see it go away on paper, as humans, you have emotions. Some people can control their emotions better than others. That's a huge, huge advantage in the stock market. A huge advantage. Much bigger advantage than being a math genius or knowing how to read charts. If you know how to control your emotions, especially in times like this, you will do extremely well in the stock market. But going back and saying that, oh, I enjoy these things just because it gets views. Yes, unfortunately, these types of things do get more views than when things go well for some crazy reason. But I'll repeat it again. I'd rather have 0 views and have everything go green every single day. Every single day. Because at the end of the day, my portfolio is worth way more than my YouTube channel. The money that I make from YouTube ads. The portfolio is the reason that I will retire hopefully sooner than my retirement age, not the views on YouTube. Important to understand. Important to understand. What is going on here in the chat again? We have QNC here now following the trend. Thank you very much. And hopefully every new member does enjoy his membership. Every new member does enjoy his membership. I appreciate the support. I appreciate the support. Just so you know, if you become a member of the channel, I'm not selling you any courses. I'm not trying to contact you on WhatsApp or on Telegram or whatever. That's not me. That's probably a scammer. I'm not selling anything. No courses, no paywalls, no nothing. So if you become a member of the channel, don't expect me to reach out via text or anything, because that's not going to be me. I just want you to know that, because I've seen some other people get screwed by scammers. Unfortunately, I cannot control the whole comment section. YouTube doesn't help. But just so you know, I will not ask you for a number. I will not ask you for a username on Telegram or Discord or whatnot. If someone does, it's probably a scammer. Don't answer. Don't follow up. Important to note. Important to note. Yeah, this is on TradingView. This is on TradingView. I'm not sponsored by them. I wish they did, but I'm not. There is now, yeah, Black Friday sale already starting, up to 80%, but the 80% is only for like the highest tier. The lowest tier is 30% off right now on the yearly subscription. But yeah, that couch has seen a lot of action. Yeah, the couch, the, the couch from yesterday's post. I know. But I mean, if we would be having more of these days, I would start to post maybe chair pictures. But yeah, fortunately for us, this is the pre-market right now. What about the 1K I sent you last week for the Vegas trip? It's already gone, liquidated, evaporated, poof, completely gone. But yeah, going back here, let's see if we got some announcement. I know Webull reported yesterday, double beat, but yeah, unfortunately for them, they report when the market is not really in a good mood. Let's see what the stock has done for them. Webull, yeah, literally doesn't move. Zero moves here, despite a double beat. For Webull. BMNR also reported. I don't know what they report, but they also had their earnings this morning, and it seems like they're up a tiny bit right now, which means, is Ethereum up? Not really. Pablo, obrigado. By the way, thank you for your work on YouTube, and thank you very much for making the videos available in other languages. Greetings from Brazil. Obrigado, Pablo. And there, with regards to videos in other languages, it's now being done automatically by YouTube, which is not always the best thing, but I might have something to share with you, especially Spanish, German, Portuguese speakers pretty soon. What do you think? Do you think advertisers will pay more if you skip the videos or if you watch them? Of course they'll pay more if you watch the whole thing, but I mean, I skip every ad, and yeah, on one account I don't even have ads, because YouTube Premium is a pretty good one. YouTube Premium is a pretty good subscription. It sucks that you have to pay not to watch ads, but I mean, it is what it is. The service is free, right? YouTube is free. Yes, sometimes it sucks that you can not even skip the ad, but if you see ads, skip it. I don't mind, of course. Your time is more valuable than the extra cents that I might get from you not skipping an ad on YouTube. What did I say? BMNR. Okay, so we have some announcements here with BMNR. I don't own BMNR anymore. As you know, I sold. I bought CoreWeave instead. Will I buy it again? Probably not. Am I in margin? Well, some people will say the call options, no. But other than my call options for PayPal, I have no margins, nothing. Nada. So BMNR, they report $328 million in profit, launches MAVN staking, and declares a dividend. Okay. Full year net income reaches $328 million. Earnings per share hit a record of $13.39 in fiscal 25. Bitmain declares a 1 cent annual dividend per BMNR share. Annual dividend. So whoever owns here BMNR shares, you're getting 1 cent per share per year. It's the first large cap crypto company to issue a dividend. It's interesting because I didn't think they would issue a dividend this early. I thought they would issue, I mean, I thought they would just keep accumulating more and more ETH, stake more and more, make, of course, money on interest. But I did not think they would. Okay, then again, it's 1 cent. So big deal. Pilot staking partners selected for live testing ahead of the full Mavan rollout. Bitmain holds the largest ETH treasury in the world. This is well known. Annual shareholder meeting scheduled. Oh, interesting. Annual shareholder meeting scheduled for January 15, 2026 at the Wynn Resort in Las Vegas. Fitting. Fitting. Okay, I guess a trip to Las Vegas might be worth buying one share. I'm just kidding. I'm just kidding. Yeah, I agree. I agree with you. Silly market. Silly market. How do you think is it worth to exchange my Google shares for it's I saw Google change, I say no. No matter what. There's no reason to change Google for anything. Like it's such why sell Google? It's such a great company. They've knocked it out of the park with Gemini 3. It's funny how the tables have turned. Previously you've had Perplexity, OpenAI, and all of these things are going to destroy Google's business. And now we are in a place where Google is so strong with their own model that the other companies are probably going to start to freak out. Funny how that works, right? Funny how that works. Mavan is a valid. Wait, where's that? Where's that comment gone? Here. Mavan is a validator network. Okay. Thanks for the explanation. Thanks for the explanation. The local, yes, I know. The local has a. The local is also one of those painful ones, right? Because you know you own a good company, you know it's better than many of the other companies that have moved up significantly, and yet this one, okay, it has moved since April, but it should be much higher. But okay, in this case again, we have time. We have time. I'm not in a rush. I'm only in a rush with my March PayPal options. Those are the only ones. June, maybe I'll be in a rush in 5 months or so, but right now, only the March ones. And then all the rest is just for 2027. So I still have time. So I still have time with that. But the thing here, yeah, when you own options, you're most of the time in a rush because you're playing against time. When you own shares, you don't care that much. You don't care that much. My average on Nebius is around 40. 40, what did I say yesterday? 40.8, something like that. 40.8. Pretty good, I think. Pretty good. Some part of Google shares to Melly. Again, I don't see a reason to touch Google. That's the thing. I don't see a reason to touch Google. So yeah, this is currently, actually, let's look. So cheap stocks, we have for now AMD that's up 1.2, Nvidia 0.7, Intel 0.4, ASML, TSMC are both down around 0.8, 0.9. Micron is up 1.7. They were down 10% yesterday. Then we have Qualcomm, Lam Research, CLAC, and Applied Materials down up less than 1%. As for the fintech players, it would come at a surprise for some, but not for most. PayPal is green, but as you know, that doesn't mean anything. Bull is up 2.4%, Dave 1.6, Robinhood 1.5, PayPal 0.7, Chime 0.6, Pagaya 0.1, dLocal is basically flat, Sezzle is flat, and SoFi is down a little bit. Sezzle yesterday was holding up. Yeah, Sezzle yesterday was basically flat. Not bad. Congrats. Congrats. Pagaya yesterday was down 5.6 despite also opening up a bit higher. Where is Chime nowadays? Oh, okay, still 18. Still 18. Okay. Okay, Bull is up 2.4. That's about it. That's about it. That's about it. Oscar, where is Oscar? Where is he? At 13 yesterday. Wow. So back at the July, August lows. Crazy. Crazy. Bring your own tomato to throw at Tom. Poor guy. Do I plan on turning the PayPal options into stock at one point like 2027? At one point, yes. I mean, because the 2027 ones that I own are 90, 100, and 120 strike price, right? January 27. If at some point in 2026 it goes above 100, I'll probably already convert quite a lot. But first, I have my March ones, $100 March and $100 June call options. The March one, as I said, I'll wait a month, see what happens, and then probably take a small loss, convert them to, or roll them over to January 27, $90 strike price, and then not touch anything anymore. We'll see what happens with the June ones, because with the June, I still have 2 quarters, 2 earnings reports, a long time, like 7 months or so. 7 months. So, but yeah, eventually I would like to, in this case, if it does hit and even go above it, sell and buy shares straight out. Why not add more PayPal? Because I already have quite a lot. I still have shares, but I already have quite a lot locked in the options one. Would I buy BMNR? I had it. I sold at a loss. I bought CoreWeave. I had a small, literally 169 shares, not much. I'm not planning on buying more or buying again. I think I can focus on other companies that again have taken a big hit, maybe not bigger, but a big hit, and I'll sleep well at night. I mean, I started by talking about the big companies, the Amazons, the Meta, these types of companies, Uber. They're all trading at very attractive prices where I don't really have to care that much. Because I know I bought great stocks, great companies, and that's it. I also understand this business 100 times more and better than BMNR. That doesn't mean that I'm bearish on BMNR. I just understand the others better and like the stories better for the others. That's it. We do have some comments here from Fed Jefferson. So he said the following thing. AI stock surge is unlikely to crash like .com. Today's AI firms show strong earnings unlike 1990s tech startups, you don't say. Financial system remains sound and resilient amid AI-driven gains. Most AI companies have limited debt exposure so far. Some of them have, of course. Future AI infrastructure may require higher leverage, raising risks. Feds will watch closely if debt levels rise in AI sector. 30% of the market experts cite AI sentiment reversal as a major risk, and Jefferson calls AI future dramatic but bumpy for the economy. I would definitely agree with that. Because my issue is not the bubble or not a bubble. My issue is going to be when AI is so good that we are going to have issues with employment. Some people say, okay, just a universal basic income. I don't think that's a good, or the final solution in this case for the whole problem, because humans, people, they need a purpose. Doom scrolling 24/7, 365 days a year while getting money from the government, I don't think is a good is a good solution. Is there a way to see the portfolio? There is a way to see the portfolio. There is a link to the Savvy portfolio in the description, or every Sunday I cover the portfolio. Every Sunday I cover the portfolio, no matter what. If we're green, red, orange, blue, yellow, doesn't matter. You will see my portfolio even if it underperforms in the short run. That's the beauty of it. That's the beauty of it. Max, thank you for the super chat. Do you think you will ever cover Elf Beauty in depth? You briefly mentioned one video, but I feel like um, with it going down 55%, it's one of the best. I did cover Elf a while ago. It's just, again, one of those companies where, okay, it might look cheap. Maybe it is. Maybe it is. I don't know. I didn't check on it that recently. But again, just like with many other companies out there, if it's not interesting enough to me, like the beauty sector, then I'll skip it. That's the thing. I don't need exposure to it. Even if it's cheap, I don't need it. I don't need to follow the makeup trends or what is trending on TikTok, because TikTok is a big deal for them, right? With their advertising campaigns and all of that. It's just not my sector. You guys know I love fintech. I love semiconductors. I love big tech companies. Beauty, care, and all of this, I don't care. I don't care much. I know some others. I know Jeremy loves this, um, but I just don't. It's not interesting. Same with the Cheesecake Factory. First of all, the cheesecake there is really not that good. Okay, I tried. It's not that good. Second of all, it's not interesting. It's not interesting. There are way more interesting companies out there. And yes, also cheap companies out there. I did also speak about Ulta once or maybe twice. I don't mind covering stocks, every stock out there, but that doesn't mean I have to own them. And I'll say if it's interesting or not interesting. For example, Ulta, it was cheap, but it was also cheap for a reason. But it's I don't know. You're already a beauty. Thank you very much. Thank you very much. um, I just started buying Weeble. I have a little over 200 shares so far. Thoughts? I mean, let's actually have a look at the. Let's have a look at the report real quick. At the report real quick. PayPal is like Meta 2022. Uh, I don't like to make these comparisons. I would love for you to be correct, and we are going up 7x from here. But PayPal, Meta did not have the problems that PayPal has or has right now. Meta's only problem was it was overspending. Once they cut it or they stopped doing it, they became more efficient. Poof, the stock went up. They didn't have to convince the whole market that, oh, WhatsApp is great or Instagram is great or Facebook. And no, the core business was insane already in 2022. So the sentiment around this whole spending was not good. Margins were down, free cash flow was down. They changed that, and poof, everything changed. Everything changed. Of course, they became way more efficient. And yes, then you've seen an acceleration in growth. So I would love to say that PayPal is like Meta 2022, but I don't. It's not, and I own both, and I own both. So this is Webull. I know some of you use it probably also for free, which is the metric that I want to see right now. So registered users continue to go up. Registered users are free users. That's up 17% year over year. This is something you should focus on. So funded accounts increased 9% year over year. Now we do have a 97.7% quarterly retention, which is higher than the previous one. So okay, at least that one here is going up, and we do have an inclusion here because of the Webull Pay acquisition. Net deposits have gone up also because of that acquisition. Customer asset, I assume, same story there. Here, do we have an asterisk? We do not. We do not. Equity notional volume is up 71% year over year. Options up 21% year over year. You're not getting the results from Robinhood, right? Because Robinhood is probably one of a kind stock platform / casino. Casinos make an insane amount of money, so it's not me being bearish on Robinhood. I'm not at all. If Robinhood offered me 1%, 2% match today in Europe, I'm liquidating every other account and I'm going to Robinhood. That should be a bull. That should be a bull thesis on its own. Um, thank you for a super chat. Taki Kornik. Is this PLN? What is PLN? Is it like Polish? Let's see. PLN. Yes, Polish zloty. Dzień dobry, dziękuję, as they say. Have you looked at Finvolution as a fintech fan? I have not. Seems to grow rapidly. It's cheap, hated for some curious reasons. I have not. I have not. This is the first time I actually see this. This is the first time I actually see this. But I'll go back to that in a bit. Webull, yeah, maybe it has that China overhang on top of it, right? Even though it's located in different locations, yes, it has that Chinese connections. I know it also has that. What did they do earlier this year? They raised money or something like that with a partner that has had orange flags over it. But you cannot tell me that this is not a company that is not growing, and it is a company that's growing a bit worldwide, I would say. In Europe, in the US, Latin America, I think. Let's see if we get some quick comments here. Some quick comments, and then I think I have 4 minutes left. I have 4 minutes left. I said we do have some yeah, okay. We do have some Polish people here. Yeah, dzień dobry. So we'll see if we get some comments here. Okay, so they are also here with Kalshi in their prediction markets. So everybody's making a move in prediction markets. I mean, if it's making money, it's making money. Webull Canada on track to become the first non-US brokerage in the group to reach 1 billion AUM. The Webull platform launch in EU, starting with the Netherlands, further expansion anticipated. So they're doing what they should be doing. They're doing what they should be doing. The stock itself is definitely not doing what it should be doing, I assume. No, it is not. No, it is not. Far from it, actually. Far from it. Finvolution, we said Finvolution, and then we will open the market. Whoop. Okay, this is Finvolution. No. Yes. Yes, it is. I thought this was Fiserv. It dropped yesterday. A double miss in this case. A double miss in this case. Pick one stock you would never sell. This is a question for everyone, by the way. Pick one stock you will never sell. Probably Amazon. Probably Amazon. If I had to choose just one, I would have. I have a couple, but if I have to choose just one, it's probably Amazon. To me, it's the best. Also, the best subscription that there is. I'm not going to cancel Prime, and I think in the United States, Prime is 10 times better. Of course, it's more expensive than in Europe, but the value that you're getting from it is insane. Is insane. To me, it's Amazon, but I've seen here Google, Tesla, AMD, SoFi, Data, Coca-Cola. Okay, interesting. Probably because you own quite a lot, and it's dividends. Its dividends are quite lucrative for you right now. Let's prepare. Okay, we are ready. But yeah, to me, it's probably Amazon. I see some very good names here in the chat, which a lot of them I would definitely agree on. Would definitely agree on. No matter what, 100 years from now, Coca-Cola will still be there. Depends. Waste management, yes. Waste management. I mean, there will always be trash. there was always going to be some trash, and I assume that business can definitely benefit from a lot of automation, robots, and all of that. Okay, ladies and gents. Ladies and gentlemen, ding, 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 bing, bing, bong, bing, bong. The market is open. We are now Friday, November 21. The markets are open. For those of you that are joining me for the first time, yes, I don't have a real cowbell or an opening bell, so I use my mouth because it's free. That's how bad this economy is. Okay. um, but no, it's been trademarked by Amit. I cannot use a cowbell, so I use other noises. The heat map will update in a bit. On the right here, we can now filter on a couple of things here. So with the fintech folks, we have Robinhood that's up 1.7, Sezzle up 1 point, same at 1.7, dLocal is up, Pagaya is up a little bit, PayPal for now is still up a little bit, but we are under $60, believe it or not. SoFi basically flat, Bull is down, Chime flat, Dave down 0.5. As for the semiconductors, Micron is up 1, Nvidia 0.7, AMD same thing, Qualcomm 0.5, all the rest are down. Much better heat map. Much better heat map. Much better. Not the greatest, but better than what we had before. Better than what we had before. TSM is down 1.4, ASML 1.2. As for the rest, Google is up the most on our list, 2.8, because it's the best. Voila. They're coming for Apple. They are coming for Apple for that number 2 spot. AST is up 2%, Rocket Lab 1.5, so we're at $40. Well, as I was speaking, it was at 40. Now it's at 39.9. Let's actually pull up the charts. Let's pull up the charts. Okay, so now you go away. Why is this on? Turn off. Okay, so Google is trying to get back to $300, slowly but surely. Slowly but surely. Wait for the algos. It's going to bring it down. Yeah, I'm not celebrating. I'm just saying it's nice to see some green. It's nice to see some green, but that's about it. That's about it. It's nice to see some green. AST is up. Rocket Lab is up. Micron, Nebus is trying to go back above that 100-day moving average. Robinhood cleared that gap from September. CoreWeave back at 70. It's quite quick. Yesterday we're at 82. Shift 4 holding up a little bit. Sezzle is up. BMNR is up 2.3. Palantir is up 0.8. Iron is up a little bit. Nu is still at 15.5. AMD still above. Okay, AMD is literally like, are we going to fill that gap here or are we not going to fill that gap here? That's a pretty big gap. It's another 15% or so on the way down. PayPal, touch wood here, is up almost 1%. Oscar is flat. Mercado Libre is back above $1,900. Adobe is green but flat. Marvel is red. Meta is 590. HIMS is flat. dLocal is up. Applied Digital is down 3.8. That's the one that's down the most. That's the one that's down the most. Is PayPal the most hated stock ever? Probably. Yeah. Apple. No, apparently Google already surpassed Microsoft. Apparently Google already surpassed Microsoft for third. Unless that's changed already, but no, a day or two ago, they surpassed Microsoft, and I was also surprised. I thought Microsoft was second and Apple third, but apparently Apple is back second because Apple didn't really take such a hit. I would say Microsoft did. It's a tight race. Yeah, I know. I know. Duolingo less, because I think Duolingo is more in a circle of people that follow it. Not that many. PayPal and Adobe definitely. I would say PayPal more. D-Local versus PayPal. Oh, I had this question already once. I hate answering that one. I hate answering that one. In the meantime, let me pull up Novo Nordisk. Yeah, Novo Nordisk is probably a double bottom here, but what do I know? Um, Look, it's difficult choosing between D-Local and PayPal because one is just so cheap that it should be trading at probably double the valuation that it is today. The other one has just so much upside because it's such a small company that's growing fast, that's profitable already. I own both, so I'm lucky. I'm unlucky with the timing, of course, but if I had to choose, I don't know. I don't know. I don't know. D-Local probably for the multi-bagger potential. Because if I remove like the options potential for PayPal, then D-Local for the multi-bagger potential. But based on the position that I have, of course, I it's PayPal, right? Um, but yeah, we don't know. We don't know how long this green action will last. Might not last more than an hour. Who knows? We do have some buying here on Bitcoin a little bit, 20 to 80,000 or so. Now it's at 84, so a little bit of buying action. Maybe let's pull, yeah, a tiny bit, not much. What does Ethereum do? Ethereum did see a small rebound. Well, now $1,000 or so. $1,000 or so. What did I say? S&P. So today is gonna be the day. Today S&P is green. Where is it? Ah, here. What the heck happened here? This is the Nasdaq. This doesn't make much sense. This doesn't make sense. Let me see. Maybe I clicked on something else. Yeah, no, this doesn't make sense. Clicked on the wrong one. Or it's not updating. Or it's not updating. I don't know. But it should be green. It should be green. No support for Nvidia. Where is Nvidia? Yeah, Nvidia is also red. Nvidia is red. It's interesting that we see AST green. Is there a news? Is there a news? Nasdaq is delayed. Try IXI. Ah, yeah, okay, yeah, this one. Thank you. Okay, yeah, this one. Yeah, the candle was from yesterday. I was like, this doesn't make any sense. But yeah, it's barely green. The Qs. Everything's barely green now. Although on the side, we are still fine with the stocks that we follow. Is there anything official launch date? Official launch date December 15. Okay. Up 3%, 3.7. Do I own PayPal? Yes, I own PayPal. Do I own Tesla? I do in the retirement portfolio, but much less than before. Okay, so we do have news for AST. It's not like a BS bump right now. Okay, good to know. Google did touch 300, it seems. Google did touch 300. Sezzle is up 4%. Okay, finally it seems. I know some people own it. Shift 4 holding up yesterday, flat, today green for now. D-Local is a bit green right now. New is green. PayPal is green. Okay, so we're still... there's one name I didn't check. Oracle. I wonder what happens with that one. Oracle is still getting hit. Oracle is still getting hit. So I guess this is the whole CDS thing going on. Um, okay, Oracle is still getting hit. Why haven't I gotten into Novo Nordisk? Yeah, too much of a turnaround story. Too much of a turnaround story for me to add to the portfolio. I went the other way. I had United Health, and then I stuck with Oscar. I stuck with Oscar. Two questions here. One about Mastercard. Mastercard, Visa, tremendous companies. Both of them tremendous companies. Yes, I know. Joseph Carlson has now a position in Mastercard. I'm not surprised. It really fits the portfolio. I mean, the companies that he does own, both companies are incredible companies. My convictions around CoreWeave and Nebius has not changed. Shocking, right? Shocking. But no, they have not changed. They have not changed because I listened to management. I saw the reports. Again, I rather trust the companies and their management than some article that comes out for clicks and whatever. I will admit that I will be wrong in the future if that's the case. So far, no. So far, no. So my convictions have not changed at all. He already had MasterCard. Okay, so I guess he bought more. Um, I guess he bought more. No, I've never looked at Caspian much. I mean, I know it's the e-commerce slash financial thing, right? I think in Kazakhstan or something like that. But no, I have not looked much into it other than that. What time is it? Oh, we have 2 minutes left, and then I have to go, unfortunately. But I do have a video recapping everything that we basically covered in this live stream for the people that did not join us. But I do appreciate everyone that did join us today. Appreciate that. Hopefully, we shall see each other again next week. But yeah, right now, this is basically it. Did I increase? No, but I will. Probably add a little bit today. Of Uber. So, all in all, to finish it off, better today than yesterday for now. I don't know how long this will last because yesterday we left the stream and everything was bright green. Today I'm leaving the stream where a lot of names are green, but we have a mixed heat map here. Maybe it's better. Next week is going to be a pretty low volume week, shorter week in the stock market as well. So I don't know if we should be expecting many moves, but yeah, I guess we like to see this better than continuous red, but we'll see. Maybe in a couple of hours we'll be back for another therapy session. Who knows? But anyways, thank you all for joining. Appreciate all the new members of the channel, the gifteds. Really appreciate that. Hopefully we don't have to make or be in therapy sessions for a much longer period of time. But it is what it is. 12 months from now, 24 months from now, will we complain? Probably not. If you own great companies, right? If you own great companies, I think you'll do well. I think you'll be very happy that you owned great companies, that you bought great companies at these prices right now. Maybe, yes. And look, I am an investor in tech, in high growth companies. So I know I'm taking the hit right now quite heavily. But I also know I'm still outperforming the market comfortably year to date, still at 40+%. So I cannot have it both ways. I cannot be up significantly compared to the market and then complain when I'm down more than the market when there is a market downturn. You cannot have it both ways. I know what I own. I'm comfortable owning what I own, and I'll own it for a long period of time. And as long as the thesis is correct, I'll sleep well. But and by saying I don't enjoy seeing my portfolio get wrecked, I don't enjoy reading comments of people that have lost a lot of money or wish that they could be buying more because they need cash right now to do something else. No, it's not fun, but it is what it is. It is the stock market. We are in it because we decided to invest in stocks. That's it. We enjoy the stock market on the way up. We will not enjoy it here on the way down, although we might enjoy good prices of great companies. So Just because we own small companies, high beta names, does not necessarily mean that we only have to buy those things. No, an Amazon, a Meta, a Google are great companies to own and buy. Yes, even a MasterCard, even a Visa, great companies to buy, probably less volatile. Yeah, probably less upside than a Nebius or a CoreWeave or a Cypher or whatever. But so what? If you will be making money, it's all that counts. It's all that counts at the end of the day. With that said, thank you all for joining. Hopefully, you all have a wonderful rest of your Friday. Or maybe if you're already in a weekend, well, you'll have a great weekend. Have a great weekend. It's always better when the stock market is closed during the weekend so you can spend time watching the Premier League. That's back. Spend some time with friends and family, maybe your girlfriend, maybe your couch. Wink. But yeah, we shall see each other in the next one, and hopefully I see you Monday morning for another live stream or during the weekend in other videos. See you all.